Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
What about a view of the economy and, in particular, jobs? Because U.S. job growth in the year through March was likely far less robust than initially estimated, which risks fueling concerns that the Fed is falling further behind the curve to lower interest rates. Take this, for example. Goldman Sachs and Wells Fargo economists expect the government's preliminary benchmark revisions tomorrow to show that payrolls growth in the year through March was at least 600,000 jobs weaker than currently estimated, about 50,000 a month. We have with us Stuart Paul. He's U.S. economist for Bloomberg Economics. He joins us here in the Bloomberg Businessweek studio. So, Stuart, there are a number of caveats in the preliminary figure, but a downward revision to employment of more than 51,000 would be the largest in 15 years, and it would also suggest the labor market has been cooling for longer. Are you thinking this way at Bloomberg Economics when it comes to revisions?
We are. We're actually a little bit more skeptical of the current official numbers coming out of the Bureau of Labor Statistics. Our best estimate is that the non-farm payrolls through March of 2024 are going to be revised down by a total of 800,000 jobs. So we're a bit higher than the 600,000 that are being estimated by Goldman and Wells Fargo. And we think that a lot of that downward revision is going to be backloaded, so mostly coming after the summer of 2023. And that points to material cooling in the labor market. Now, we know from the Fed that they've been saying that cooling of the labor market beyond what they had been expecting would warrant a change of policy. It would warrant the start of rate cuts. And we already know that the unemployment rate is above what they had been marking in the June summary of economic projections. When you then take out hundreds of thousands of jobs from what they had believed to be characteristic of labor market conditions, you're now talking about a much softer labor market. You're talking about underlying wage pressures and inflation pressures that are far less potent and far less buoying of economic dynamism and economic activity than they had previously expected.
So a lot of huge numbers being thrown around. I'm hoping you can just put this moment into context for us, because this is certainly the most I've ever cared about a revisions release, I have to say. It feels like everyone is laser focused on this right now. Is it unusual to see these types of revisions? I remember, it just feels like for the past couple months, that has been the caveat that we've been saying about, like, okay, we get the numbers at 8:30, but we'll really get the numbers in about a month's time. Is this truly unusual, though, that we are seeing such big revisions?
This is unusual because it's part of a quarterly re-estimation process. And even if you're looking at the lowest estimates of what these downward revisions would entail, it would still be the largest downward revision that we've seen in about 15 years. So it's pretty meaningful. Now, we're used to the BLS recognizing, as you were saying, well, our first crack at it, maybe it wasn't perfect. As part of the monthly non-farm payrolls estimates, they do survey about 100 to 150,000 businesses every month. But they then extrapolate out from those surveys to get an estimate of how many jobs were created throughout the entire economy, not just in that 100 to 150,000 jobs, 100 to 150,000 businesses. This quarterly estimation process looks at about 60 million business records. And so that helps to change the entire estimation process. And this is part of that re-benchmarking, that revision. This would be a big admission that their first crack at the data, their second crack at the data wasn't quite perfect.
What if it's not? What if it's not a big revision?
So let's say that the revision still came in under some of the lowest estimates and came in at just about 500,000 jobs, right? So then we're still talking about a downward revision of monthly job growth to the tune of about 60,000 jobs, right? So that's about a quarter of the annual pace of job growth that we saw last year on a monthly basis. That's still a pretty meaningful revision, right? 25% of the jobs that we thought we added every month during the past year just ends up disappearing because we're admitting that our estimation process just wasn't great. So again, I think that is really just going to reorient the Fed and reorient the Fed's understanding of the labor market at a pivotal moment as we're marching towards the September FOMC meeting.
30 seconds left with you, but I remember after the most recent jobs report, I asked acting Labor Secretary Julie Su, I mean, how can investors trust these numbers if we keep getting these massive revisions? And I mean, if you look forward and this dynamic continues, I mean, do you think that BLS credibility starts to get questioned?
I think that BLS credibility is already being questioned. I think that it's going to take a lot of effort to recalibrate some of their models, including the birth-death model, which is operative in the background of every monthly estimate for total payrolls. And I think that communication of that re-estimate is going to matter a lot for regaining that credibility.
Stuart Paul, thank you. U.S. economist for Bloomberg Economics here in our Bloomberg studio. Coming up next, Democrats this season. Well, for them, Fox News is getting too big to ignore. That story on the other side. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, it's no surprise that the stage of this week's Democratic National Convention is featuring the party's biggest names, but some of them are also showing up in an unexpected place, the Fox News studio. We're talking about folks like California Governor Gavin Newsom, Pennsylvania Governor Josh Shapiro, U.S. Secretary of Transportation Pete Buttigieg, part of a growing group of Democrats who are appearing on the news network that's popular with conservatives in the run-up to the presidential election between former President Donald Trump and Vice President Kamala Harris. Hannah Miller is a Bloomberg News media reporter, and for Businessweek, she writes about the draw for liberal politicians to Fox News. She joins us here in the Bloomberg Businessweek studio. Check out Hannah's story on the Bloomberg terminal and at bloomberg.com/businessweek. So Pete Buttigieg is kind of like the typical example, Hannah, of a liberal who will go on Fox News. He's been doing this for years. But why increasingly are we seeing some new names from the Democratic side pop up on the channel?
Yeah, they want to tap undecided voters. You know, Fox News is the most watched cable news channel, and especially among independents. So they're trying to get people who maybe haven't made up their mind ahead of November 2024. And, they feel like they can maybe convince them to come over, have a Democratic vote.
And it's interesting. I mean, you interviewed the vice president of politics at the network and senior executive producer for Fox News Sunday, Jessica Locher, and she said that they're calling and asking. It's not necessarily that they're just being invited on. They really want to go on.
Yeah, it's a two-way street, and Fox News is happy to have them. They actually see a ratings bump when they have Democrats on for different segments. They want to come on these shows. They want to refine their own talking points. They want to see what maybe the other side is thinking, practice what they are telling their constituents. So there's kind of a two-way benefit here for the politicians and for Fox News itself.
Is there a flip side of this, that you have Republicans going on MSNBC, for example? Oftentimes the two networks, even though Fox News, more people watch Fox News, the two networks are talked about as sort of being, okay, Fox News leans to the right, MSNBC is its Democratic counterpart. I'm not saying that's a fair judgment or it's not a fair judgment, but do you see people on the Republican side going on MSNBC?
Yeah, I think in the run-up to the election, networks across the board, they're trying to diversify the voices that they have on air. And it's been very interesting. One of the congressmen I spoke to, he was like, we all should be going on networks outside of our comfort zone. Republicans should be going on CNN and MSNBC. Democrats should be going on Fox. This is how we get, our word out, show people our message and, get asked tough questions.
And everyone, of course, should be coming on Bloomberg television. But it's interesting. You do point out that even though we are seeing more of this two-way conversation, there's still selectiveness when it comes to which actual shows, which actual programs, which hosts that they're picking here.
Yeah, one of the representatives I spoke to, he was like, I don't do the evening entertainment shows. I don't want to be used as propaganda. I stick to the daytime news. He felt like they were more fair in terms of, questioning him. And he wants to stick with journalism, basically.
But there is this distinction between sort of the primetime, in his words, entertainment-focused news shows that are incredibly high-rated versus the daytime shows, which actually don't have as big of audiences.
Yeah, and we do see some Democrats hit up, the primetime shows, especially during the DNC. We saw them, in prime hours at the Fox set. So it'll be interesting to see, if maybe that changes. Maybe we'll see more Democrats even on these evening programs.
Do you think that we're going to see this represent any sort of growing middle politically, or at least from an entertainment or news perspective, content perspective here in the US? Like, is something happening now that's different than the run-up to previous elections, or does this always happen?
Yeah, it's interesting. One of the politicians I spoke to, he said America isn't as polarized as we think it is or as we want it to be. And, that there are people who are in the middle, that most Americans aren't passionate about either side. And, that's who's up for grabs in this election. So it'll be interesting to see.
You mentioned in your piece that, and you already mentioned this on our air, that these folks want to reach independent voters because they're the ones who are going to decide this election. Mark Gongloff was on our program from Bloomberg Opinion yesterday, and he kind of boiled it down to this. It's a stadium full of people in the United States, so we're talking like 100,000 people, could likely decide the course of the next 4 years when it comes to the White House. And I thought that was a helpful way to think about it. Do more independents, watch Fox News than other networks?
That's correct. Fox News is actually the leading television news network among independents. So, that's who Democrats are trying to tap here.
Of course, we are getting closer and closer to November. We're now in late August, so it'll be interesting to see how this one evolves. But I want to talk to you about something else in the media space, another story that you've been following, and that is the never-ending tale of what's going on with Paramount Global.
Do you think it's going to last longer than the election?
That's a good question.
Is it going to go past November?
I mean, what do the tea leaves say?
Yeah, so things are heating up here. We have this competing bid submitted by Edgar Bronfman Jr. They are arguing that it is better than the Skydance deal that Paramount has already agreed to. What we're waiting to see right now is that if that go shop period gets extended, and that maybe Bronfman can even submit a higher bid than the one that he's already put in.
Interesting. Yeah, I mean, I was going to ask, what makes it better? I mean, again, that other bid has already been accepted. What is their argument for why this is better?
Yeah, they're arguing less dilution for shareholders. They're looking at a higher price per share. And the other thing, too, is they're arguing that Bronfman is an experienced media executive, that he has this background to lead the company into a new era.
I just feel like it's worth noting that the two folks who are going after this are both heirs of fortunes.
That's funny.
Like, what is it about the attraction of a media company to an independently wealthy son of a billionaire
Yeah, is that
dynasty?
such a great trophy? What's going on?
Yeah, it's a huge status symbol. The media families of ages past, they were some of the most respected people in society, and I think that still lingers. I think this is a jewel to add to your crown. And Paramount is such an established brand.
Yeah, go ahead, Katie.
I was going to say, well, tell us a little bit more about Bronfman, because you write in your story that he has a long but somewhat rocky history as a media executive. So take us into his resume there.
Yeah, so he has had a bit of a bumpy road, we'll put it that way. Right now, he's been doing investing through Waverly Capital. He's very interested in the media space. He was at Fubo. It's been an interesting path for him. I think you can look at him and be like, yeah, he does have experience in the space, but does he have experience in succeeding?
Okay, but this is a really, if this deal were to go down, if this deal does go down, it's a really complicated structure because of National Amusements, who has voting power. What is Bronfman going after, and what is Ellison going after?
Yeah, so they've structured the deal pretty similarly in that they're putting in this offer for National Amusements. That's the holding company owned by Sherry Redstone, who was the heir to Sumner Redstone. So they're shooting for that. That's where the controlling shares are. A lot of people I've spoken to about this have said Sherry decides at the end of the day what happens.
But in terms of assets, do we know anything different about how they have differing tastes for what assets? I mean, we know Ellison is a film producer and Paramount's a really important studio for him, for example. Also, we know he's into the news business and CBS is important. What do we know about what Bronfman thinks?
Yeah, so for both of them, they've argued that they're here to preserve the prestige of Paramount. And that's been very important to Sherry Redstone, that she wants to see the company in good hands. Actually, it's been interesting with the Bronfman deal. There's the potential that Sherry could have more say in what happens with this company that she's so passionate about. So that could be an appealing factor for her. But yeah, we know with Skydance that he's looking at those film assets. That's in his wheelhouse, and that's probably what he's prioritizing.
Okay, Bronfman, Redstone, Ellison. The names are certainly bold-faced, including Hannah Miller, Bloomberg News media reporter. Check out her story on the Bloomberg terminal and at bloomberg.com/businessweek.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, Katie, our next guest has worked with companies including Jose Cuervo, Nike, Smirnoff, and more at events such as Art Basel, the Tribeca Film Festival, the Grammys, Super Bowl, and many more. Kellie Pean is the co-founder and CEO of Brand New. It's a marketing agency that provides clients with marketing strategy, event production, content development, and more. Kellie joins us from New York City. Kellie, how are you?
I'm great. How are you?
Doing pretty well, thanks. You know, I was thinking about this as I was, as Katie and I were doing prep for this segment and doing our research. It's like if you think about a marketing agency and what a marketing agency has to do today, it's such a far cry from the Mad Men days where they were just focused on like, you know, maybe a 30-second TV spot, maybe, but likely just a, you know, single page print advertisement in a magazine. When a company comes to you, what are they looking for?
Such a good question, and so interesting because my background originally was much more in that kind of Mad Men approach. I think historically, coming out of college and going to business school, I was very much on this trajectory of more traditional brand marketing and looking at those traditional advertising channels, which was fantastic. I mean, I learned so much, so many foundational skills. But once I started to step outside of that and kind of change my approach to really learning and really developing more around the marketing skill set, I realized that there was so much more nuance than I think those traditional avenues. And that perspective really helped to inform what we do at Brand New. People really come to us and our brands because they need the cultural mastery and a cultural think tank to really help them understand how to inject their brands in the middle of consumers' lives in culturally resonant ways. That is very different than running a linear 30-second TV spot. Our agency is really focused on trying to figure out who is our community that we're after, where are they, and really how do we show up where they already are so that it's much more authentic in our interactions and positioning those brands around that.
And it's interesting, if I look at your client roster, and Tim read off a few of them, but I mean, it really spans tech. You have consumer packaged goods in there. There's also some media companies in there. And some of the principles that you're talking about, I mean, when it comes to the common denominator of how to apply them across multiple industries, what does that process look like?
Absolutely. I think one of the biggest value propositions that we have is myself and my co-founder, Alyssa Convertini, really came from completely industry backgrounds. As I mentioned, I was much more focused on this kind of traditional brand marketing subset. And she really came from more of the digital marketing, kind of media, publishing, content world. And once we were able to really marry our thought processes together, it was able to tap in, I would say, to a much more like 360 ecosystem of what we could offer. I met her actually after leaving corporate America and moving into the entertainment publishing industry, which was a huge leap for me at the time and not part of my original plan, but was definitely stepping out on kind of like faith and excitement to try something new. And I'm so happy I did. I think really challenging myself to go outside of the confines of how I was being trained and really some of the things that I was doing as a day-to-day marketer were really challenged once I was able to put myself in these different environments. And when you're able to have more of a cross-section of offerings and understanding this kind of interconnectivity around integrated marketing, it's a huge unlock. I mean, being able to understand the power of media, the power of PR, the power of social and web, talent integrations, really that 360 approach has been a huge opportunity for us in building these robust integrated programs for our clients.
All right, Kellie, I'm going to throw you a curveball here because as you're speaking about this, I'm thinking right now we're actually seeing a real exercise in brand marketing or integrated marketing when it comes to the Democratic National Convention. We saw it last month with the RNC. Each of these events and campaigns are trying to portray their candidates in a certain light. Give us the brand attributes that you would ascribe to Donald Trump and Kamala Harris.
That's a great question. I actually, did watch the kickoff to the DNC last night. I did catch quite a few speeches of the RNC as well. I think that what you find, with Donald Trump and his campaign and listen, I'm from the Midwest, I'm from Ohio, and, I grew up in a very kind of simple, small town of Dayton, Ohio, and have somehow found myself in New York City. So it's been quite a journey for me in really understanding the vast differences and kind of like this city versus rural life. But I think one of the things the Trump campaign has really done for brand attributes is really speaking more to the everyday kind of middle American people. And from a PR standpoint and a messaging standpoint, I think there's been a lot of consistency with messaging. Now, regardless of what you believe, I do think that there is an interesting take on just consistent messaging when you're doing any sort of campaign, right? You're able to really infiltrate people in a different way. You're able to have much more repetition and recall that allows you to stay on message. And I do think that that's something that, from a marketing and a business standpoint, that's a very positive attribute, for any comm strategy. I think with the DNC kickoff last night, granted, I was a little late to jump into it, but it did run pretty late. I think they had a lot of messages to get through. I think there was mostly a two-pronged approach here. Number one, I think it was important for President Joe Biden to be able to have a conversation of, obviously the big change for him being the presumptive nominee for a second term. And that is something that was a bit new to the Democratic Party, of course, but also he had to spend some time really advocating and heroing and highlighting Kamala Harris. So, there were two different messages that were very different. One they prepared for a long time, and one was probably newer in the more recent weeks, which is probably why they went past midnight on the East Coast. But there was a lot to get in.
Yeah, I didn't even make it to the beginning of the Biden speech. I was long in bed. Kellie, before we let you go, and by the way, a good reminder from you that everything is branding that's out there. We like to say everything is business, and everything is certainly branding too. Kellie, I want to hear from you. I mean, you have a really interesting journey. You talked about Dayton, Ohio to New York City with a stop at Booth in Chicago for business school. Talk a little bit about representation when it comes to marketing and advertising and sort of what you saw just out of business school and what you're trying to create at Brand New.
Absolutely. I mean, business school for me at University of Chicago was a huge life change for me. I think that it really challenged me in different ways to not just think, but also to be exposed to so many different people with different backgrounds and mindsets and cultures and lifestyles that I just wasn't exposed to. And with that kind of access and opportunity to collaborate and connect with people, you get to a much better output. And I think that that's something that I've really carried with me in the, creation of our agency at Brand New, but also into any workspace that I'm in. Representation is paramount. Any project that we start, from the moment we're brief, we're always thinking about, do we have the representative people to be able to even speak to and respond to this community? Part of the reason why we're named a collective, there's intention in that. And that's because we really hand select a lot of our supporting kind of subject matter experts who are more representative of the spaces that brands want to be in, because culture is so nuanced. The way we are as individuals is so nuanced. And in an effort to not just get it right and good, but to be so representative where your attendees and your audience just feel like it's the most authentic experience, it's a testament to our work. It's a testament to our values and our intention in everything that we do. So that is something that we're deeply passionate about in all the rooms that we take up.
Kellie Pean, co-founder and CEO of the agency, The Collective Brand New, joining us from New York City.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
You drive me
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, look at that. We got less than 18 minutes to go until the close. Katie, is it going to happen?
Probably not, but
Yeah.
maybe. I
All
don't
right.
know. My heart is pounding either way.
All right, what are we waiting for to happen?
We're waiting to see if the S&P 500 is red or green for the day. If it's green, that's 9 straight days. If it's red, it's not.
And if it's 9 straight days of gains for the S&P 500, it'd be the longest winning streak going back
2004.
decades.
Thank God I knew that. I think it's 2004.
I
It's
was
a
gonna
long
say,
time.
I was going to say decades.
Okay.
More than a decade.
That's safer.
More than a decade.
You got to
is
hedge
safer.
yourself.
Yeah, you got to hedge.
Speaking of hedging.
Let's get to Bill Davis, portfolio manager over at Hennessy Funds. He joins us here in the Interactive Brokers studio for our drive to the close. Katie and I were talking about kind of being a meh day when it comes to what we're seeing, except for the Russell 2000. She pointed out a little earlier.
There's just a bad day.
It's just a bad day, but volume is really light today. I mean, more than really light. Everyone's on vacation. What's going on?
It's August.
Yeah, it's August. Is that it?
That's it.
That's it. Why are we even here?
It's all a good question. Carol Massar had the right idea. She is not here. But let's talk about some of the potential catalysts. I mean, we do have some stuff going on this week. Jerome Powell speaking at Jackson Hole on Friday. We're also still in earnings season. We have a lot of big retail names reporting this week, and it's been really mixed bag when it comes to the overall earnings season, but also with some of those retailers. We also have politics going on. And Bill, when you look at the embarrassment of riches that I just laid out, politics, Fed policy, and earnings, what do you think matters most for markets at this juncture?
So this is guest choice. I get to
Yeah,
decide.
pick your poison.
I actually think the biggest thing going on that people aren't paying a lot of attention to is the degree of concentrated risk in the S&P 500.
All right, let's go.
You weren't expecting that, were you?
I haven't heard it for a little bit. Let's go.
Yeah. So the last time, so if you look at, and it really started in 2023, and it's gotten worse actually, especially in Q2 of 2024. The spread between the S&P 500 performance-wise and the equal weight is among the greatest it's ever been in 30 years. And what I would tell you, and this is basically historical fact, is that the last 2 times we've seen this, we've seen a reversion that has, and in fact, the most recent one was 98, 99, right before the dot-com bubble burst. What we ended up with was 20 straight years of the S&P equal weight outperforming the S&P 500 by 300 basis points annualized. So annualized, that's a big number. And so, right now we have, whether it was last year with the Mag 7 or now the Mag 5 or whatever we want to call them, so much of the weight is in the top handful of companies and so little weight is in the bottom 50. The bottom 50 companies in the S&P 500 is 2% of the index. And yet that's where a lot of alpha gets created. And so I think this is a really strange environment. It's not a reason for lack of volume, I don't think. I think that truly
This is a bigger story than
Yeah, I think the lack of volume is just like August.
Yeah.
But I think that this is a bigger story. And I also think that the spike in vol that we saw last week or the week before is kind of the beginning of, it's like, it's the tremors of the earthquake before you get the quake. And
how big of a quake do you think we'll get?
I think we're going to get a complete rotation away from most of the super big mega cap names. I think they're just way overvalued. Not all of them.
Well, I want to talk a little bit about your Hennessy Stance ESG large cap ETF, STNC. Chipotle, Tyson, McDonald's, Apple, Capital One. Those are the biggest holdings. But you still benchmark it against the S&P 500.
Yeah, we do, and we always have. And STNC is a one account within a GIPS composite that goes back 10 years. And over 10 years, we have always, I would say, bucked the trend of traditional ESG managers who kind of go like all in on mega cap and a little bit of healthcare and a little bit of financial services, and they're all kind of beta one and all of that. And we have always, in many ways, internally tracked the equal weight because it's kind of a better benchmark, frankly, for an active manager than a market cap weighted index. And we also, by the way, we cap position sizes at 3.5%. So it's really hard to like track the S&P when, Apple's 7%, Microsoft's 7%. Mm-hmm. And so even if we happen to own those names, we're going backwards if they're going up.
Why is Chipotle or why is Tyson ESG?
The way we look at ESG is based on relative strength. So we're basically looking at every sector and subsector in the economy, and we're basically saying which companies, after unemotionally evaluating up to 24 different material risk factors, which companies are in the top half of their peer group. And so Tyson Food, I couldn't tell you like off the top of my head why Tyson made the top half. They might just be slightly better than everybody who's in the bottom half. Mm-hmm. But what I can tell you is that's not the only thing we look at. So we not only look at whether we like a company from a values alignment standpoint, but then we also need to hold a simultaneous point of view, which is that we like them from a fundamental standpoint. We think they're going to outperform over the upcoming 3-month period, rebalance quarterly. And then ultimately what we do is we basically say, look, these are the positions we like. How do we buy them with the least amount of risk? And so when we optimize, we don't care. We're not trying to track the S&P.
We only have less than a minute left with you. I want to go back to the discussion of concentration, though, because we did see the equal weight S&P hit a record yesterday, but it has been massively underperforming big tech. And I feel like part of the reason why that debate over concentration fell off the radar is because we had seen a correction in the NASDAQ 100. But back when we were having that discussion, what I would always hear from the tech bulls is that the fundamentals justify the valuations. I mean, you take a look at the earnings growth, it's just best in class. And I'm wondering how you think about that argument.
I think in some cases it's valid. I don't think NVIDIA is worth its price, but I do think Broadcom is. So there's two AI companies that have sort of vastly different profiles. But I would say it's not even just, I would say Lilly is overpriced. There's a lot of stuff at the top that's, PEs of 23, and then there's a lot of other companies where the PE is 15. And I just don't think that needs reconciliation, and I think it's going to happen in the form of a rotation.
Bill, you got to come back, hang out with us. We do appreciate you taking the time today. Bill Davis, Portfolio Manager at Hennessy Funds.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.